Welcome to XRP Pro Ledger, and today we are going deep on a date that every serious XRP holder needs to have locked in their mind right now. May 14th, 2 days from today, the Senate Banking Committee convenes for the formal markup session of the Clarity Act, the Digital Asset Market Clarity Act, the single piece of legislation that would permanently define what XRP is under United States law and permanently remove it from the jurisdiction of the Securities and Exchange Commission forever. This is not a rumor. This is not community speculation. This is a scheduled Senate committee session. And what happens in that room on May 14th has direct structural consequences for every institution that has been waiting on the legal sidelines before deploying capital into XRP at scale. And I want you to stay with me through this entire breakdown, because at the 7-minute mark, I'm going to show you exactly what the price math looks like the moment the Clarity Act clears its first major hurdle, and why the analysts watching the $1.50 level right now are focused on exactly the right number. But before we get to the math, we need to understand what the Clarity Act actually does, because most people in this community are treating it like another regulatory headline, when it is actually something structurally different from anything that has happened in crypto law before. The Clarity Act does not just regulate XRP, it redefines it. Under current law, digital assets exist in a legal gray zone. The SEC has claimed jurisdiction over assets it considers securities. The CFTC has claimed jurisdiction over assets it considers commodities. And for years, XRP has existed in the middle of that argument, with institutional capital sitting on the sidelines waiting for legal certainty before committing at the scale the XRP ecosystem requires. The Clarity Act resolves that argument permanently. It codifies a clear framework that separates digital commodities from digital securities, based on the decentralization and utility of the underlying network. XRP, with its payment-focused infrastructure, its institutional settlement use cases, and its CFTC-aligned characteristics, sits directly in the digital commodity category under the frameworks being discussed. SEC guidance already issued in 2026 reaffirmed XRP alongside Bitcoin, Ethereum, and Solana as a digital commodity. The Clarity Act would take that guidance and make it permanent law, removing any future administration's ability to revisit the question. That is what May 14th is actually about. Now let us talk about the banks, because this is the part of the story that most people are misreading completely. Reports confirm that banks are pushing back on certain compromises in the Clarity Act framework, and the community reaction has been predictably negative, treating the bank pushback as an obstacle. But here is what that pushback actually signals. Banks do not lobby against legislation that does not affect them. Banks do not spend political capital pushing back on bills that are irrelevant to their business. The fact that major banking institutions are actively engaged in the Clarity Act markup process, pushing for specific language changes, negotiating specific provisions, is the clearest possible confirmation that these institutions are planning to operate directly in the XRP digital asset space the moment legal clarity is established. You do not fight for the rules of a game you are not planning to play. The bank pushback is not opposition to XRP adoption. It is the banking sector negotiating the terms of its own entry into the XRP ecosystem. Polymarket odds currently sit at 62% for Clarity Act passage. That number has been fluctuating, and the fluctuation itself tells you something important, because sophisticated capital does not bet at 62% on something it considers impossible. 62% on a Senate committee markup means institutional money is watching this process in real time and pricing in a more likely than not outcome. Now, I want to address something directly, because it connects to why so many people in this community are struggling with conviction right now, and it is the same psychological pattern that plays out in every single market cycle without exception. Right now, XRP is trading at $1.46. The price has been consolidating for weeks. The headlines feel repetitive. The social media excitement is quiet. And a large portion of this community is either waiting for confirmation before adding to their position, or questioning whether the fundamentals they believed in 3 months ago still hold. This is the discount window, and most people cannot see it because of how the human brain processes financial risk. Near the top of every market cycle, the social proof is everywhere. Green candles on every screen, friends texting about crypto, news channels covering it, social media flooded with excitement. That excitement creates an emotional safety signal that tells the brain it is safe to act because everyone else is acting. Right now, none of that excitement exists. The price is grinding sideways. The community sentiment is flat. And that quiet feels like danger to someone who has been conditioned to use social proof as their confidence signal. But here is what the data shows instead of what the emotion says. The institutions that do not need social proof to act are already positioned. They have accumulated $1.5 billion in ETF AUM before the Clarity Act has even passed. They are negotiating the terms of their entry into this ecosystem through active engagement with the Senate markup process right now. The retail market is waiting for excitement to feel safe. The institutions already acted in the silence. Now let us talk about what is happening in the market while this legislative process plays out, because the technical picture and the fundamental picture are both pointing at exactly the same level. XRP is currently trading at approximately $1.46. It broke above the 1.45 resistance level that had been holding for multiple weeks, but faced rejection near 1.50. The key support level analysts are watching is 1.44 to 1.45, and the key resistance that changes everything is 1.50. Here is why 1.50 matters so much right now. Every major technical analyst covering XRP in May 2026 is pointing at the same conclusion. If 1.50 flips from resistance to confirm support, the next technical target is $1.80. That is a 23% move from current levels, triggered by a single level flip. And the fundamental catalyst that could trigger that flip is sitting 2 days away on the Senate Banking Committee calendar. Now let us connect this to the ETF picture, because the institutional demand data is telling a story that the price chart has not fully reflected yet. XRP spot ETF products recorded between $25 and $39 million in net inflows in the most recent reporting period. US and German institutional products are leading the inflow activity. In total, AUM across the XRP ETF complex has stabilized above $1.5 billion. Think about what that number means in context. $1.5 billion in ETF AUM, accumulated since XRP spot ETFs launched, during a period when the price has been consolidating between 1.40 and 1.50, during a period when retail sentiment has been quiet, during a period when the Clarity Act has not yet passed. This is institutional capital entering XRP before the legal clarity is confirmed, before the Clarity Act passes, before the price breaks out. The institutions are not waiting for May 14th to start positioning. They are already positioned, and they are adding to those positions every single week through ETF inflows, while the retail market waits for a green candle. And this is where the math gets very precise. Standard Chartered's Jeffrey Kendrick has built price models that place XRP at $2.80 by end of 2026, $12.60 by 2028, and $28 by 2030. These models are built on ETF inflow assumptions of $4 to $10 billion and confirmed regulatory clarity. ETF AUM is already at $1.5 billion and growing. Regulatory clarity is 2 days away from its most important legislative milestone. Both of the core assumptions in Kendrick's model are converging simultaneously in May 2026. And Galaxy Digital's Swift framework adds another dimension. Their analysis shows that capturing just 1% of Swift's $5 trillion daily payment volume would structurally justify an XRP price of $4 to $5 based on liquidity bridge requirements alone. 3% Swift volume capture aligns with the $12.60 target. The Clarity Act is the legal foundation that makes institutional Swift-level volume deployment on the XRP ledger possible at scale. Without legal clarity, institutions cannot deploy at Swift-level volumes. With legal clarity confirmed, the infrastructure is already built in waiting. Now I want to address something that happened this week that most people overlooked completely. David Schwartz, one of the original architects of the XRP ledger and Ripple's CTO emeritus, has been formally appointed as an honorary board member of the XRPL Foundation. On the surface, this looks like a ceremonial title, but read it carefully. The XRPL Foundation is the independent governance body responsible for the protocol development and institutional adoption framework of the XRP ledger. Schwartz moving into a formal advisory role at the foundation level at exactly this moment as the Clarity Act approaches its markup, as institutional ETF flows accelerate. As the May 14th vote approaches, this is not a coincidence of timing. Schwartz has consistently been the most technically credible voice in the XRP ecosystem. The institutions building on the XRP ledger know who he is. They know what his involvement signals about the seriousness of the protocol's institutional trajectory. His appointment this week is a direct signal about where the XRP ledger is heading institutionally, and it is happening at exactly the moment when the legal framework needed to support that trajectory is 2 days away from its most this critical vote. So let us zoom out and see the complete picture assembling right now in May 2026. The Clarity Act Senate Banking Committee markup is scheduled for May 14th, 2 days away. Polymarket is pricing passage at 62%. Banks are not opposing XRP. They are negotiating the terms of their own entry. ETF AUM has crossed $1.5 billion, with weekly inflows of 25 to 39 million. XRP is sitting at $1.46, one level flip away from a technical breakout toward 1.80. Standard Chartered models $28 by 2030 on assumptions already being met. David Schwartz formally joined the XRPL Foundation Board this week. Trading volume is running at $2.4 billion per day during consolidation. And Galaxy Digital's math says 1% of Swift volume alone justifies $4 to $5. Every piece of the puzzle is already in place. The retail market is watching a sideways chart and waiting for a reason to feel confident. May 14th is 2 days away. The institutions are already inside, already positioned, already adding through ETFs every single week while the price sits at 1.46. The question is not whether the Clarity Act changes things for XRP. The question is whether you understand what is already confirmed before it passes. If this analysis changed how you were thinking about XRP in the May 14th vote, hit like and subscribe. I drop deep dive breakdowns like this twice a day to keep you ahead of the move.